Nigeria opened a billion-dollar Chinese-built port in Lagos on Monday. The Lekki deep-sea port is expected to ease congestion elsewhere and help Nigeria become an African hub for transshipment, the handling of cargoes in transit for other destinations.
This project could create at least 200,000 jobs. That just means income.
China's ambassador to Nigeria is Soy Jianchun.
Today really is a special day for China and Nigeria, and Nigeria and China. And I think that it's very, very important. This is a transformative project, game changer project, not only for the engine of the economy for Nigeria, for the West Africa.
China is among the largest bilateral lenders to Nigeria and has funded rail, roads and power stations. Nigeria's President Muhammadu Buhari has made building infrastructure a key pillar of his government's economic policy. He hopes it will help his ruling party win votes during next month's presidential election. The new port is 75% owned by the China Harbour Engineering Company and Singapore-based Tolaram Group, with the balance shared between the Lagos state government and the Nigerian Ports Authority.
Hi, welcome back to Joe Blogs. So as you've just seen, Nigeria has opened the deepest port in the whole of West Africa. And this has been designed to really help Nigeria to grow its export trade. Nigeria is an asset-rich country. It has large reserves of oil. It also has gas and coal and other commodities that the rest of the world wants to buy. So opening up a huge port is obviously a big step in terms of being able to develop more international trade. But in today's video, I want to look into the details of this port because as you saw in the video, it's been entirely funded by the Chinese Belt and Road Initiative. And as part of that deal, China now owns 75% of the port and will be taking 75% of all of the income that's generated from it. So in today's video, we'll have a quick look at Nigeria because it's the first video that I've done on the country. We'll then have a look at the Chinese Belt and Road Initiative, what the motivations are behind it, how much China has invested, and how much it's actually invested into Nigeria. We'll then have a look at what's happening in the economy of Nigeria, how it's placed right now. And then finally today, I'll wrap up with my summary. So what I think the implications of the opening of this port are for Nigeria, what the implications of the Belt and Road Initiative are in terms of all of the different countries that China have invested into, and what the long-term implications of all of this are for the global economy. So before we get started on all of that, if I could ask you for a thumbs up at some point during this video, if you're enjoying the content, please subscribe if you haven't done so already. Don't forget, I always include chapters, so if you don't have time to watch everything, you can pick and choose what you'd like to see. And if you'd like to support the channel, please have a look below where you'll find links to YouTube Super Thanks and membership, as well as Buy Me a Coffee and Patreon. And as always, I'd like to say thank you so much to everyone that has supported the channel. Really appreciate it. Nigeria is located on the west coast of Africa and is bordered to the north by Niger, to the east by Chad and Cameroon, and to the west by Benin. Nigeria's current population is around 220 million, making it the sixth largest country in the world by that metric. However, in terms of landmass, it ranks as number 30 and is roughly the size of Texas in the USA. Nigeria was formerly a colony of Britain, however gained independence in 1960. Oil was first discovered in the country in 1956 and has since become the dominant force in the economy and Nigeria's main form of income. In terms of oil production, this chart shows the 20 largest producers of oil currently. And as you can see, the top three countries are the USA, Russia and Saudi Arabia. However, Nigeria is ranked at number 15. But in terms of the global supply of oil, this table shows the top exporters, and Nigeria comes in at number 9 on this list. And I think it's interesting to look at this chart because Saudi Arabia is by far the world's largest exporter. Russia is number 2, Canada comes in at number 3 ahead of the USA, Iraq is number 4, the UAE is number 5, and the United States comes in at number 6. So whilst the US is the world's largest producer of oil, it's also consuming a lot of that oil itself, and so in relative terms it's exporting less than some of these other countries. If you're a regular viewer, you'll know that I like to keep people on their toes. Make sure you're watching by asking the occasional question. And I've got one for you right now. What is the capital city of Nigeria? Well, if you said Lagos, you'd be wrong, because it changed in 1991 from Lagos, which is the former capital, to the current capital of Abuja. So hopefully that will be at least one fact that you can take away from this video and share with some of your friends and family. This chart shows a breakdown of Nigeria's exports by category. And I think out of any country that I've made a video out, this is the one that is most dominated by one category. As you can see, oil exports equate to around 89% of all of the revenue earned by Nigeria. So this is completely dominant. And in terms of the value of those exports, this chart shows the data back to 2018. So you can see that between 2018 and 2020, there were fluctuations in the total value. In 2020, there was a big drop in line with the COVID pandemic when the whole world went into lockdown and demand for oil fell. We then had a period where there was low level of income, and then during 2021 there was a considerable bounce back in oil revenues for Nigeria. However, as you can see, over the course of the second half of 2022, there was a sharp drop in revenues, and this is in line with the global slowdown and the fall in oil prices. And this chart shows a breakdown of Nigeria's imports. And I think what's surprising is that the biggest single import category is also oil, 31%, which is larger than most countries that we look at. And this is because Nigeria doesn't have enough of its own refinery capability. So in terms of gasoline and diesel and all of the actual usages of oil, they're importing the finished products. They do have some refineries, but not enough to service their own demand. And then as you can see, Nigeria is importing a lot of parts and equipment. It does have a big manufacturing industry, but to feed that industry, it's importing a lot of raw materials and parts. And one of the other key import categories is food, because Nigeria doesn't produce enough food to feed its own population and therefore is having to import from the global markets. And this chart shows the value of the imports over the last 5 years. And you can see here there's a noticeable upward trend. And particularly since the ending of the pandemic lockdowns in 2020, there's been a considerable rise in the cost of the imports. That cost has come down over the last few months as we've seen a reduction in oil, food and other commodity prices. This chart shows the movements in the balance of trade for Nigeria over the last 5 years. And as you might be aware by now, the balance of trade measures the difference between the cost of your imports and the value of your exports. So basically, if you're selling more than you're buying, you'll be in positive territory. If you're buying more than you're selling, then you'll be in negative territory. And when you look at this graph, it looks a little bit like a heart monitor. It's going up and down wildly. So over the course of the last 5 years, Nigeria have swung wildly between being in positive territory and being in negative territory. So they've had periods where they're earning more and then periods where they're earning less. But if you look at the situation from late 2019 onwards, the chart is predominantly below the zero line. And when a country is running a negative balance of trade, the only way that it can fund all of its purchases is by using its reserves, so by dipping into its savings. And this chart shows the current account for Nigeria dating back to 2013. And the current account is essentially the bank balance of a country. This shows the level of reserves. So if the line is below zero, then you are dipping into your reserves, you're spending your savings. But when it's above the zero line, you're actually accumulating reserves. And what this chart shows is that from late 2018 onwards, Nigeria went into negative territory in terms of its current account. So that meant that it was spending its reserves. It was having to use them to buy in essential imports. And it remained in negative territory all the way through until late 2021, when demand all across the world started to rise and the price of oil started going up. The current account did dip back to zero at the end of 2021. However, in the first half of 2022, Nigeria moved back into positive territory. However, the trend over the last few months is downward. This chart shows the movement in inflation in Nigeria over the last 5 years. And what this shows is that 5 years ago, the inflation rate was 12%. During the course of 2018 and the first half of 2019, inflation steadily came down and got to a level of around 9%. However, from the middle of 2019 through to the end of 2021, we saw a steady increase in prices. And by the end of 21, inflation was running at around 14%. And then in 2022, as we saw commodity prices rising following Russia's invasion of Ukraine, prices took off again, and the current rate of inflation in Nigeria is sitting at 18.5%. And this is a major problem for the country because around 50% of the population, and the population is large, 220 million, so we're talking around 110 million people, are considered to be at or below the poverty line. So these people are spending the majority of their money on food, and so they struggle to be able to cope with price increases of 18.5%. And this chart shows the movement in food inflation. So this is the price of food over the last 5 years. And you can see that the trend is very similar to what we've just seen, but the actual levels are much higher. So 5 years ago, food inflation was running at around 19%. During 2018 and 2019, it dropped to around 14% and is now up close to 24%. And as I'm sure you're aware by now, food inflation is entirely indiscriminate. It affects everybody, and therefore the poorest members of society are the worst affected because they simply can't afford these price increases. And when the price of food is rising at a rate of 24%, quite often that means that people have to buy less food because they just don't have enough money to pay for the same amount of food that they were buying this time last year. And this chart shows the movement in interest rates in Nigeria over the last 5 years. So you can see that 5 years ago, the rate of interest was sitting at 14%, which is extremely high, but this is a developing nation, so quite often you have very high rates of interest. During the course of 2019 and then moving into 2020, those rates came down to a level of around 11.5%. However, over the course of the last 6 months, we've seen rates starting to rise again rapidly. And the official rate of interest was recently increased by another 100 basis points to the current level of 17.5%. China's Belt and Road Initiative was launched in 2013 and is a grand plan by China to try to join up the whole of the world by creating a land route and a maritime route. So far, the Belt and Road Initiative has involved 144 different countries, and it's estimated that the total investment that China has made to date is over $1 trillion. This map highlights some of the investment and infrastructure projects that China have invested into all across the world. And you can see that Africa is one of the most heavily invested regions. The infrastructure in Africa is underdeveloped compared to many other parts of the world, and China see this as a large opportunity. So at face value, the Belt and Road Initiative looks like a fantastic idea because it's helping a lot of different countries to develop their own infrastructure, develop their road and rail and aviation networks, and to be able to join the global community. However, there are some really interesting features about the way that this investment has been structured and also the type of projects that China has been focusing on. This chart shows a breakdown of the sectors that China has focused on for its Belt and Road investments, dating back to the start of the project in 2013. Now, in terms of the colour coding here, the orange section of these bar charts relate to energy products, so predominantly oil. The grey section relates to transport. The yellow/green section relates to the development of metals. And the turquoise or light green section relates to real estate. So what this chart shows is that the predominant focus of China's investment has been into energy products and transport. And for many of these countries, the investment is focused into the export of these energy products. So it's focused on developing and expanding the extraction of that energy and then being able to export it to places such as China. So in terms of the motivation, it would seem that there's a vested interest in terms of China investing into the country in order to develop the natural resources, extract them, and then export them to markets such as China. So there is definitely a commercial relationship here because China needs to import large quantities of oil and other commodities. And so having a trading relationship and an investment into these countries is going to help with that future supply. But in addition to securing the supply of energy products, there's also another factor involved in the Belt and Road Initiative, which is preferential for China. A large part of the cost of these projects is construction, actually building the infrastructure to enable these facilities to start operating. And in most of the situations, the contracts for these construction projects are awarded to Chinese companies, and Chinese nationals actually fly into the country and are involved in building the project. So a lot of the investment is actually benefiting Chinese companies, and the cash is actually going back to China. And just to highlight that point, this chart shows the breakdown of the total investment being made into the projects and how that's split between pure investment and the cost of construction. And you can see that between 2013 and 2021, the construction costs of these projects equated to over 60% of the total investment. And if you look at the situation for 2021, you can see that the percentage for construction costs is now up to more than 76%. So the vast majority of all of the money being paid for these projects is going to the construction companies. And as I mentioned a moment ago, most of these construction companies are Chinese companies. So as I mentioned at the start of the video, the Lekki deep sea port is now open and operational, and this was a $1.5 billion investment that is now owned 75% by the Chinese authorities and the Singaporean investor Tolaram. But let's have a look at some of the other infrastructure that the Chinese Belt and Road Initiative has been funding in Nigeria. The second largest investment to date of $1.3 billion is a new railway between Lagos and Ibadan. The third largest investment of around $1 billion is a new hydroelectric power station in Zungaru. which has cost just under $1 billion. The creation of the light rail network in Abuja was estimated to cost $500 million, as was the modernisation of the Nigerian railway system. Upgrading the road between Abuja, Kefi and Makurdi was estimated to cost just under $500 million, and the total cost of the National Public Security Communication System was estimated to be around $400 million. So what's the summary and conclusion today? Well, I wanted to post this video because the opening of the Lekki deep sea port is obviously something to celebrate from a Nigerian perspective. This port enables them to be able to do more exporting and importing, to transact in more goods, and hopefully to grow the economy of Nigeria. So overall, it's a very positive thing from a Nigerian perspective. But as with anything, you need to look into the details in terms of how this has been achieved and what the economics of the situation are going forward. And what we've seen today is that the Chinese Belt and Road Initiative has funded this whole development, the $1.5 billion. And so that really should have helped develop the economy of Nigeria already. But the problem that Nigeria has, and the problem that all of these countries have when they're dealing with the Chinese investment, is that a lot of this investment is going on the construction. So a big chunk of that 1.5 million would have been paid to the companies that were hired to do all of the building work. And a lot of those companies, if not all of them, are Chinese. So there's a very circular relationship in terms of the cash. The Chinese authorities are releasing the cash for the payment and development of the port, but much of that cash is then going back to China because the companies that are being hired to do it are Chinese. Now, you may be sitting there thinking, well, actually, that's fair enough, because without this initiative, without China putting this deal forward, Nigeria wouldn't have this deep sea port. And so it's a positive overall. And I think there's merits to that argument. But one of the issues, I think, going forward is that China have a 75% ownership of this port. So they're going to be taking 75% of all of the revenues and the profit that's coming out of it. So that ownership structure will restrict the benefit of this port to Nigeria, because 3/4 of all of the benefit are going to go to China and Singapore in the long term. Now, from an economic point of view, Nigeria is going through a difficult period, and it has been for the last few years. We saw the charts that showed that the balance of trade had moved into a negative position. The current account was being depleted. And one of the reasons that Nigeria is struggling is that it has a large debt burden and therefore has high interest costs and repayments on that debt. And of course, one of the problems with the Belt and Road Initiative is that all of these deals are structured as debt deals. So the Chinese authorities are not giving away free cash. This investment has been put in the form of a loan that needs to be serviced and repaid. And the big problem that Nigeria is facing is that they've got a lot of these deals. We went through some of the Belt and Road Initiative projects earlier in the video, but there are actually a lot more of these in place. Now, the terms and conditions of these deals are not actually formally released into the market. It's reported that the confidentiality clauses in these contracts are really long, really detailed, and really penal. So nobody really knows the full details apart from the government of Nigeria and the government of China. But it's estimated that the total investment that China has made into Nigeria since the Belt and Road Initiative started is now up to around $8 billion. And of course, all of that debt will carry an interest burden and repayments. And if Nigeria can't keep up the repayments on all of these loans, then it will then need to renegotiate the situation with China. Now, if you're a regular viewer of the channel, you'll know that I've covered this before. We talked about what happened in Sri Lanka. Sri Lanka was also a big beneficiary of the Belt and Road Initiative. There were lots of different projects undertaken, and one of them was a major port development called Hambantota. So quite similar to what we've talked about today for the Lekki deep sea port. Now, Sri Lanka unfortunately got itself into financial difficulty and couldn't keep up the repayments on that port. So rather than defaulting on the loan, they agreed a deal with the Chinese authorities whereby they granted a 99-year lease on that port. So Hambantota port is now entirely owned by China. They can use it for whatever purposes they like. And that's raised concerns with countries like India and the USA about whether or not China could potentially put a military base on the site and then use that in future conflicts. So there are some political issues here. It's not just an economic perspective. So if we go back to Nigeria and look at all of the different projects that are currently underway and what's going on with regards to the economy, The economy of Nigeria is entirely dependent upon what happens to oil prices. Now, as you're probably aware, over the course of the last 6 months, the price of crude oil has fallen significantly. It's come down from a high of around $120 at the early part of 2022 to the current levels of around $80 per barrel. And that downward movement in the price of oil will have a big impact on the economy of Nigeria. It will reduce the amount of cash that they're earning from all of their exports and therefore puts pressure on the budget. And as we go forward, they may not be able to make all of these repayments on the Belt and Road Initiative loans, and therefore they will be exposed to potentially then having to agree to some form of deal whereby maybe the Chinese authorities decide that they take over all of this infrastructure in Nigeria and keep it for their own investment purposes. So if that did happen, it would obviously put China in a very strong position in terms of buying all of the commodities from Nigeria, because if Nigeria doesn't own the deep sea port, then it can't actually export all of its oil all across the world unless China agrees to it. And if China says, well, actually, we'd like to buy that oil possibly at a discount, what's Nigeria going to do? What's their alternative? Because if they don't have access to their own port, they can't export their oil, and so it will just sit under the ground. Now, obviously, this may never happen. It may never come to fruition. Nigeria may be able to keep all of those loans fully current, pay all of the interest, and everybody's happy. But I just wanted to raise the issue with you because these are the concerns that are rising all across the world. China have been investing heavily over the last 10 years into a lot of energy and metals and transport. And if all of these countries now get into financial difficulty and they're struggling to be able to keep the repayments going on these loans, then they might forfeit these assets. And China would be sitting in a very strong position because it could take ownership of lots of key infrastructure all across the world, and that infrastructure is located very close to energy sources, whether it be oil or gas or coal or whatever it is. And obviously China wants to make sure that it's got plenty of supplies to keep the home market growing. So in terms of today's summary, I think the takeaway from today's video is that the Belt and Road Initiative has been a great idea and it is helping to develop lots of infrastructure in underdeveloped countries. We are seeing new ports and roads and rail connections being built all across the world. But the big question is what's going to happen when all of these countries have to make all the repayments on these loans? And worst case, what will happen if they can't actually afford to make them? So hopefully that's given you some food for thought for today. If you've liked what I've said, then please give me a thumbs up. And thank you so much for watching this video all the way through to the end.